Good morning, Paul Georgie from Allendale. It's March 16th, 2010. Well, it's turnaround Tuesday today is the best way to describe it. We've got the dollar down 30 after being sharply higher yesterday. Crude oil up 91 as we speak. Gold up 16 to $18. That's given us some support in the grain markets. Calls there are 1 to 2 higher in the corn, 2 to 5 higher in soybeans, wheat 1 to 2 higher. A lot of reports out this morning, a lot of news tidbits to talk about here today. Federal Reserve will be meeting today. They're not expected to change interest rates at all, but that just them meeting will cause some tension in the markets and some evening up, position squaring and so forth. We did have housing starts out this morning. They were down about 6% for the housing starts, about 1.6% for permits. Not the worst thing in the world when we've got a lot of existing houses to move, but it doesn't help out the construction workers and put people back to work, and that's could be some carryover negative over into the livestock trade as we are concerned about meat consumption and demand at the retail counter. The USDA yesterday released some harvest progress. South America harvest moving right along. We got 40% done on soybeans. However, that's compared to 56% last year. And I think you have to contribute the slowdown to the large crop that they've got to harvest in South America. Corn harvest about 11% done in Argentina versus 4% last year. Reports from various analyst groups down in South America, Brazil area continue to raise the production down there. Report came out yesterday putting the Brazilian crop at 68 million metric tons, which is much larger than that 65.5 that was released not very long ago. So a lot of volatility coming out of South America as well, mostly bearish. However, we throw another twist in. The dock workers now in South America are thinking about going on strike. How often do we hear that at this time of year? And that's why we've seen some strength, I think, yesterday in the U.S. bean and meal markets. And if they do get closer to going on strike, we'll see more support in soybeans and in meal here in the U.S. markets, because the world still needs product, China especially. And that's, I think, why you're not going to see China cancel a lot of purchases made here in the U.S. simply because of the uncertainty of getting that product out of South America. The USDA also released wheat crop conditions. Kansas wheat 63% good to excellent, Texas 55% good to excellent. Chart-wise, we're in a sideways trading range in corn. We're fighting that 360 to 359 area. It seems to be holding at this point in time. Some additional news that doesn't help the corn market at all is ethanol prices. Ethanol prices are the lowest since September of 2009, which that continues to weigh or lean on the corn market here. However, demand, potential planting delays here in the U.S., the planted acreage survey coming up, or planted acreage release by USDA coming up on March 31st, also should keep a floor underneath the corn market at this time. The technical support 359 or to 60 range in the May corn. Resistance, you've got resistance at 366, then at 370, and then again at 375. Soybeans, 921.5 support here this morning, and then again at 911. It looks like the bears are trying to get this market to push down into that 911 area, and then maybe even further, but struggling with that scenario as markets have firmed up a little bit. We trade in near the resistance level now, 938, and then you got resistance again at 950 and 964 in the May contract of soybeans. Wheat continues to be in the trading range. Over in the meat complex, cutout values jumped sharply yesterday in beef. We put $1.19 on the choice and 44 cents on the select. That put the choice beef over 150, which has been a huge hurdle. If we can stay there and move this product over the next few days, the end of this week, that would be very constructive and would help the cash market immensely, and also continue to get the big question that we've got in the cattle complex is fund buying. We've seen a lot of fund buying support this market, push us through new technical highs here in the nearby cattle contracts. That is, we think, is the key right now, because we are running into historical resistance as far as demand goes at around the 150 area. We've got to be careful there, and we are extremely overbought. We do have a cattle on feed report coming out here on Friday at 2 o'clock. So some position evening is expected from the cattle hedging standpoint. Contact your Allendale representative, because we think there is some need to take some protection here, use some option strategies to get these cattle protected. In the pork complex, we were up in the cutout about 22 cents yesterday. Cash markets are weak this morning, and it looks like we could see some pressure in the futures. Overnight trade was down slightly in all meat complex, but pork especially testing that 20-day moving average. We break through that here this morning on the opening. We could trigger some more stops and take us down another 50 cents or $1 lower, where you may want to attempt to buy it, but use stops to protect your risk and manage your risk here in that pork complex. If you got any questions, don't hesitate to give us a call at Allendale, 800-262-7538. We'd be happy to answer them. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.